Good day, everybody. I'm Kyle Ellicott, your host today for VCTV. Welcome back to another episode. We're super excited to have you, our live audience, joining us from around the world, along with our outstanding panel of speakers who have joined us as well from various parts of around the world, as we are finding out on the pre-show, and excited for each of them to chime in, tell you a little bit more about where they are, what they do, and their views on our topic today, which we'll be talking about investments and what's happening in the areas of marketplaces, food tech, travel, and transportation. As the world has changed potentially for quite some time, all of these industries, along with others that we've spoken about in the past, have been dramatically impacted by that and their futures ahead. So those speakers that are be joining us will provide their insights, but also are working on some very exciting things in these spaces that will take us into the future of each and every one of those, as well as they shift and change. Before we get started, I do want to give a quick shout out to Elena and to the entire LA Token team who bring us all together and make this show work very, very smoothly. So a big shout out to her and the entire team for making this happen. And again, thank you to all of our speakers and to you, our audience. We are live, so if you do have any questions, feel free to type them in the box. If we are able to answer them and they're relevant at the time, we will. If not, we'll try to save them to the end. If we can't get to them, every single one of us are available online. I'm sure on LinkedIn, social, and everywhere else we'll give to you that you can reach out and connect. Without further ado, I do want to get to everybody. We got an awesome group and a few more that might be joining us. Too many to handle, too much excitement. Let's dive right in. Brady Bunch style, I'm calling you Frederico, my Brazilian friend. Welcome to the show. If you can, just a quick introduction, who you are, what you do, and kind of how you got into your space. And make sure you unmute yourself.
Hello everyone. I'm Fred. I'm based out of Brazil, been in crypto, blockchain, and digital assets for 4 years as an investment running funds. Today we have operations worldwide, here, US, Europe, doing OTC, running trading funds, investment funds, and private equity in blockchain companies.
Wonderful. Excited to dive into that and how that's impacting all these spaces we've just been talked about. Next up, Benjamina.
Great. So I'm the founder and CEO of HigherSteaks. So we're addressing the biggest challenges caused by the meat industry by making meat using cell culture technologies. My background's in chemical engineering, did some work in 3D printing, fragrance and flavoring, had a startup before. And what really drove me to start this about 3 years ago was the impact that it would have.
Awesome. Excited to dive into that. As we've all heard, or if not, have been talking about the future of food and where this is going. So excited to unpack that and where we can go. Sharon, welcome to the show. Late night on your side of the world, but we're happy to have you and you can join us. Little intro and kind of how you got into the space.
Okay, thank you, Kyle, and thank you, Lectokin, for having me here. As you can see, my background is late at night. It's 11 p.m. right now. I'm based in Kuala Lumpur. Happy to join my fellow panelists here on this discussion session. I'm Sharon, if I didn't introduce myself, and I'm managing partner of Vote 18, and Vote 18 is an advisory firm that helps the scale-ups reach the institutional investors. So our partners are part of the ecosystem and also from the finance background. So I think that is our core purpose in doing that. In the recent couple of months, I think we have invested in a couple of AI firms and FinTech. Yeah, I think that's basically a good summary of who and what we are.
Awesome.
Thank you.
Welcome, welcome. Thaxter, you're on mute, my friend.
I'm always glad to be the guinea pig and prove that it is possible to be silent. You won't find me silent very often on this call, or ever. But I guess I'm a recovering hedge fund guy. I've been an entrepreneur in the investment management business a couple of times in my old life. I may have run into some of the people watching today. I was a sponsor and seeder of fund managers. We backed both hedge funds, and we're very lucky to be able to back some real estate funds after 2008. So this moment now, and I'm really looking forward to today. I think this moment now is one of those moments where, we don't know how long, right? 3 months, 6 months, a year. Some of us will set aside what we were trying to do before because it's impossible. But what we've done is switch gears a little bit and started funding some thematic investment pools that are looking at both the current solutions around the COVID crisis, but also to begin backing some things, Kyle, thematically today around transportation and hospitality, and what will be probably radically different in that part of the business world. So thanks for having me, and on to the show.
Awesome. And we're happy to have you. Paolo, my friend from the other side of the country, how you doing? Welcome to the show. Quick introduction.
Very good. Thank you, Kyle. Well, regarding my heritage, I'm actually Italian, even though at the moment I'm sitting in London. Nice to meet such a diverse panel, and hello to all our audience. I work as a managing director for a venture capital firm called Joyance Partners. It's an American firm that expanded to Europe last year at the beginning of 2019. And my background is actually engineering and then finance. I joined them at the beginning of last year. And in Europe, so far, we made 16 investments. Out of these, 4 are in the alternative protein space. So it's a space that we like a lot. I personally have a very strong interest in food from a nutrition perspective because I am a fitness fanatic. So yeah, I have strong opinions about it. Looking forward to the panel today, and thank you, Kyle, and Elena for organizing it.
Awesome. I saw Benjamina get a big smile on her face. She's ready to battle. So get ready. Peter, welcome to the show. A quick introduction about yourself and how you got into the space.
Yeah, sure. Thanks. I'm Peter Armand, the founder and CEO of AF Capital, an international investment boutique and advisory firm. And also, I'm a founder and CFO of a couple of portfolio companies in high-tech telecommunications and the internet media space. I've got a background in computer science and then finance, as well. Many entrepreneurs in this area and in this era. So we're an investment firm right now looking at high-tech investments. We do advisory on private equity and VC, and also have own portfolio investment into a cloud marketplace promising startup. So I think I'm better positioned to talk about marketplace startups and that space rather than food tech or travel or transportation. Anyway, thanks for an invitation. Happy to join the panel.
Awesome. Happy to have you. And last but not least, Brian, welcome to the show. Quick introduction, a little background on yourself.
Hi, hello everyone from New York. My name is Brian Halweil. I have been in the food and agriculture space for most of my career. First in the area of research and journalism. I was one of the founders of the Edible Magazines Network in the United States and the editor-in-chief for the titles in New York City and around New York City. And about 5 years ago, I began doing a lot of research and publishing around technology moving into the food chain. And I've since worked with a number of different investors in the space. Currently, I work with Almanac Insights, which is a food-focused venture capital firm in New York City. Our investments are primarily in CPG, hospitality, and technology anywhere in the food chain. And I'm also working with a company named Belltown Farms, which is actually based both in London and the United States, which is a large-scale organic farm operator. and I'm helping them with their strategy in New York, finding farms, buying and leasing farms, and growing organic crops at scale. And I'm excited to be here too and hear what everyone else is working on.
Wow, it's exciting. I mean, we've got a pretty diverse background. Let's dive in and start taking advantage of this. So as we've all mentioned, and I kind of kick things off, what has happened in the past couple months around the world has forever changed and or accelerated some of the areas that each of you are focused in some way. And if anything, that's continuing to rapidly accelerate week over week dramatically in each of these areas. And I'm curious to see, like, in your minds, what's happening in all of these spaces. And I'll start with food tech. And Brian, you went last, so we'll throw you first. What's happening in food tech? Where are things now? Where are things going? Whether that be from the investment side or the industry side, would love to have your opinion kind of kick us off on what's happening in food tech.
I think it's hard to zero in on everything that's happening in food tech because it's very different whether you're talking about on the farm with automation, robotics, and farm management software, or at the consumer, grocery, and CPG end. But I think in a nutshell, what you see everywhere is no one is denying that digital first is essential right now. It's no longer something to do if you want to be cutting edge. It's something to do if you want to stay in business. I'm hearing about a lot of people with software throughout the food chain who are closing deals without ever seeing someone face to face. So everyone from farmers to restaurants are much more open to onboarding new software, new products right now with purely virtual interactions. The part of the food chain that we look at that's getting the biggest lift right now is grocery and delivery. And so online grocery, which, pre the sort of recent events was 5 to 10% of the market, is, anywhere now from 25 to 30 or more, depending on what you're talking about, and continues to surge. And every brick and mortar grocery store is upgrading their digital game and their delivery infrastructure as fast as possible. So just a dramatic continued push in the digital direction. And of course, because the food industry worldwide continues to just be very analog by definition, that's just causing, both challenges and real opportunities, really front to back. The one last thing I will say that is now sort of becoming clear from the last few weeks is, consumers, they seem to be committed to cooking more, which is a new trend. They seem to be committed towards staples. You're definitely seeing a soft market for premium food products a little bit. And this is maybe optimistically, but people are being more conscientious about labels and health outcomes at the same time while everyone is budget conscious. So I don't know, that's a lot of what we're seeing.
Yeah, and it's a great transition to Benjamina. I mean, as people get more focused around health, they are focused more on cooking at home. Again, we talked pre-show that what you're working on is a big part of the future of food and where we're going. How do you see where we are today and kind of where we're going in general around this, playing off what Brian said? And Paolo, I know you got an opinion. I'm coming to you. Don't worry. So,
I think it's definitely just accelerated everything that alternative proteins have been vouching for. In our case specifically, we're working on pork and, everything that's happening around the US. Half of pork production in the US are having difficulties, and you're seeing things at a scale, that never been seen before. I used to go to meetings and explain to people issues around antibiotic resistance and how, if we have problems around antibiotic resistance, that's going to cost the governments hundreds of trillions of dollars. And people cannot really see that. And obviously we're dealing with a virus, it's not bacteria. I'm well aware of that. But, again, people are starting to understand like how the behavior that we each have is affecting every single one of us, and how we do need massive changes. And part of that change obviously is going to be cultivated meat, but even with plant-based that's already on market, we've seen massive growth. And I think that might be a good time to transition to Paolo, that I'm sure knows a lot about other alternative proteins. But really, we're seeing the rise in all alternative proteins, because people, it's not just around the health, but even the factories themselves, they're a lot more automated. So this means that people don't have to actually risk their life now to go to the factory and and get the food, right? And again, with cultivated meat, it will be pretty much fully automated, because we need this to not have antibiotics. So this enables us to create a much more robust system.
And I want to ask you one additional question on that. So because of what you're working on, what is the quick explanation of the difference between today's meats, say plant-based meat, and then what you're working on as well? Just so our viewers understand, because there's a lot happening in the space, and things are in some cases a little confusing to some. So a quick explanation, if you could.
I guess conventional meat, I probably don't need to explain, is the meat that you have in the supermarket, raising an animal, slaughtering it, and getting to your plate. The supply chain obviously is a lot more complicated, but in brief, that's the kind of process. If you look at plant-based meat, is exactly how it says. It's made from plants. So you're taking plants and you're processing them in order to mimic the taste of meat. And again, even with impossible foods that sometimes people are confusing because they have some genetic editing within it, it is still plant-based and it is made from plants. What we do is that we are making actual meat, but we're changing the process. So we take a small sample of cells from the animal, which we expand and push to become muscle, fat, and different types of tissue in order to properly mimic meat. And we do this in bioreactors, so it looks very similar to your brewery from the outside.
Got it. Thank you. Paolo, I've held you back long enough. What are your thoughts on where this is all at, and kind of where we're going in the future of food, and the combination of marketplaces as well, right? I mean, we're eating differently, but we're also buying differently. So how does this all look?
Yeah, I concur with Benjamina, who I think she's embarking on a journey that is long and difficult and very worthy, that the consumers' habits are changing in terms of food, right? So, the alternative protein space that she highlighted, so plant-based and lab-grown, I think is really top of mind right now, especially more so because this pandemic is suspected to have been started by an animal virus, right? Which was basically from a bat, So you can think how bad this is, right? And so I have a very strong conviction that alternative proteins will be more and more coming to our tables, not just for people that are, vegetarians, or for people that are flexitarians, which is the normal, let's say, the initial target right now, but just more in general. The products will be better. They are getting better every year. They are evolving. The cow's meat is always the same, for the past, I don't know how many years, millennia. And so the products are on the trajectory to be better in terms of taste and to be better in terms of pricing, even though it's not, in some cases, not there yet, like in lab-grown case, but we'll be getting there. So plant-based on the other hand already is. We have seen startups in the space already going public in the US, and the same thing is in Europe. We have seen startups that are making burgers, that are making chicken, that are making chicken nuggets, right? That are pea protein based. So it tastes like chicken, it smells like chicken, you cook it like chicken, but it's actually pea protein, which is amazing. So
everything still tastes all like chicken.
I told that to my sister. She didn't like it much. She's like, you don't sell that to an Italian, housewife. It's not going down easily. but I come from the countryside, so we're quite old school over there. While I live in London, and in London, I can really witness this transition on a day-to-day basis. So just to bring it back, I think the healthier element of these alternative proteins. So the fact that, as Benjamina said, they don't have antibiotics, the fact that they don't have feces contaminations, that's, they're also called clean meats, is gonna help us out a lot in the future. And the transition is happening already. And as an investor, maybe the only thing I'd like to add is the fact that from an investment perspective, we invested in plant-based startups as well as in lab-grown. The plant-based startups are already a reality. So it's an investment that you make in something that is already on the market and is already making revenues in the likes in the $1 million a year, right? Lab-grown, like Benjamina is doing, you're basically betting on the future. So it's something that it's a technology, it's a much deeper science kind of play. And so it's gonna get here, but you're really, it's a play that will pay off in 3, 4, 5, 6 years from now, right? So it takes longer.
Benjamina, anything to add on that? I see you might have a comment. Anything to add on?
So I think it's definitely on a long term. Also, I do need to add that lab grown, we're trying to move away from it, because everything in food, there's so many things that are made in the lab and then go into production. So we're trying to move away because we've seen that actually consumers react badly to it. And it's a mistake that so many people, I have employees that make it all the time. But essentially it's really, that's what we're trying to show, that we are going to manufacture it in the same way that you manufacture a lot of the food. To answer you, Thaxter, it's a little bit of a while away until we can print it at home. There's several things. So first of all, you'd have to decide a few weeks beforehand what you want, because the cells to mature. So to grow, even if you had them already grown, essentially the cells to mature, you already have usually between 3 to 7 days, and some methods are not do take up to 14 days to mature from the stem cell essentially to the muscle and so on. And on top of that, to actually have it at home in a little compact thing will be slightly more complicated, not to mention the complications of making a rebuy. So that's not 3 years away, but hopefully one day.
Be tough to decide you want a T-bone steak 3 weeks from now, and then you wake up and you want chicken nuggets. It's a tough process as you're waiting all that time, right? It's our cravings change a little too quickly, but that's good to add on. And Sharon, I want to come to you because Thraxton, I know, has got a lot of experience in this, and he's got some good trends that he wants to provide. But coming to you first, what are you seeing in all this space? I know you dive into fintech, food tech, ag tech, a little bit of all of this. What are you seeing from your side, and especially in Asia?
I think over
in a rising trend.
Yeah, I think over in Southeast Asia, where I'm at, food tech is something that we are concentrating more, even more so when this pandemic happened, right? So a lot of investors are now looking into food security. So food security really means about access to nutritious food and things like that, right? Aside from lab-grown meat, as Benjamina had mentioned, we have also seen companies whereby I think over 2 days ago, they secured an investment from the Singapore government investment fund, 250 million, if I'm not wrong, on something that they could, it's called a peel science, whereby they could actually preserve grown food for a longer period of time using natural resources. So these are some areas that we are also studying, not only in the meat or lab-grown meat kind of technology, but also in how to preserve that food that is grown, like your vegetables, your fruits, and so on and so forth. So I think in Southeast Asia, plant-based kind of meat is pretty common because there's a huge number of vegetarians around anyway. So I think plant-based meat has been around for some time now, and I think there's quite a number of investors who are actually looking into that. But having said that, I think in terms of food tech, Southeast Asia still has a lot to learn from the US and the Europe as well. Yeah, so I think from that perspective is where we come from in food tech, yes.
Yeah, we're not yet at the Star Trek moment where you can just press a button and vapor, it shows up, but soon enough. And,
yeah.
And with that being said, I mean, Peter, I want to come to you. On the marketplace side, I know you've had a lot of investment experience and the engineering background, but let's talk about how we're buying this stuff. I mean, marketplaces dramatically changed in the past 2.5, 3 months in almost every area of the world. How we buy our food, how we buy our products, how we buy everything. But when it comes to these areas, I mean, what are you seeing that has shifted from the investment side in marketplaces?
I would say that regarding marketplace niche, we see a high impact from and on a traditional B2C businesses, which are currently trying to very quickly digitize as many sales as possible, right? And trying to become online e-commerce B2C businesses rather than offline. And otherwise, they simply will not survive. That is why they invest in marketplace integrations and product information management systems, logistics system, and so on. And some companies even start their own marketplaces to adapt to supply chain challenges and maximize their return on investment ratio on online consumers, which is new revenue for them. All that makes marketplace models very attractive for VCs right now. However, what has changed during the pandemic? Previously, the VC-backed marketplace companies were quite limited with experimenting on its product fit and market fit on the real customers, right? But they still were allowed and were cash-backed to do so because of necessity to find the niche. And right now, a very large part of VCs only review projects very relevant to COVID crisis, and namely marketplaces for education technology, remote technology, telemedicine, health tech, and a few others. In other words, all hot sectors in high tech right now. But in the meantime, a large part of VCs, especially well-known with large capital, haven't changed investment preferences because they're oriented on long-term average profitability for investors. They just have now more potential deals on table, and funding cycle may become even longer. Mm-hmm. That's specifically to marketplaces. There are some also general observations about the market in general. Can share a few if you do. I see two trends. One is that everybody is talking about, and another is not that evident. The trend number one is that number and volume of deals decline, but there are more investable companies right now in the market. So right now there is a huge decline in the number of new deals, and investors have much more options for fund allocation because many companies which were previously avoiding new rounds because of sufficient growth funding from revenue, they are now totally unsure about market performance and need to have capital for at least 1 or better 2 years of operations and development. And trend number two is that many of you as well believe that COVID and after COVID recession is the best investment time for seed and angel investment. And they usually refer to the previous Great Recession of 2009, during which were founded many of today's unicorns, WhatsApp, Uber, Slack, Square, to name just a few. But we don't have to draw the same conclusions now in 2020, 10 years later. And I think that because of recession, there will be lack of competition and discoveries of blue oceans with new businesses. I don't think there will be a lot of them. The previous recession of 2009 coincided with the launch of first iPhone and the start of mass market smartphone era. So that unlocked the network effect for business models of many new startups at that time. So now, as the ecosystem of Apple and Google are well developed and the mobile application market is formed and absolutely different now, it may be a start of new wave of unicorns, of course, but the source will definitely be different.
Yeah, and I agree, and I want to get to that, come back to that in just a minute, actually. Frederico, I want to come to you. So we've talked about all these different pieces. How does FinTech, or how is FinTech playing a role in how all of these things are shifting and changing? I mean, you're funding funds, making investments, and playing on the crypto space. What are you seeing as how that's playing a role in these areas as things have shifted? I know, what was it, Friday, we had a great show around FinTech and blockchain, and talked a little bit about the changing marketplaces and the rise of a virtual economy, and how that's driving some things. What are you seeing in reference to, travel, food, marketplaces in general, and how FinTech plays a role in that?
It's interesting because if you look at food transportation, especially food and transportation, some of the applications for blockchain have the same impact for any of these verticals. If you think of food, there is a major concern about safety. And blockchain is something that really address this kind of problem when you can trace the supply chain and for example, for a major company like Nestle that has some blockchain initiatives in this sense, to show to customers that you have a responsible sourcing. Other than that, when you can trace the whole supply chain, there is two major advantages. First, you can trace back to the whatever problem it happens, and I can say, okay, this food comes from this farmer or that one. And the second is you can cut some intermediates and decrease the cost of the whole supply chain. This happens to transportation, this happens to food, and it happens for a lot of other industries. So this is one of the major benefits of blockchain, right? When you talk about blockchain, you're talking about digitalizing or tokenizing, whatever, assets. You're talking about identity and privacy. And all of these apply to any sector that you're talking here or any other sector that you can think about. We see some initiatives addressing fraud, for example. There is in China, there is one project, it's Tael, just to address the problem with milk and different products fraud. And when you can use blockchain to put some kind of seal saying, okay, this is real, this has not been imported from, here in Brazil, we would say from Paraguay, because a lot of products come from Paraguay. But this is for real, and that gives a seal of safety to any product. So this is a major trend that we see for the food industry and relates directly to blockchain. So preventing fraud and food safety are two major trends besides everything that we have been talking for the past half an hour.
Yep. I like it. And Thaxter, I want to come to you. I mean, you've worked in the hedge fund space for a number of years and have probably a pretty macro view of all of this, not just from the industry side, but from the investment side. Would love to hear your perspective on where we're going, not just on the food side, but also around marketplaces and transportation and really how this all plays together, looking ahead while looking back at the same time.
Well, I think that, times like this there's some patterns that you see which are basically the same in every quote unquote crisis moment. And one of them is back to basics, right? You know, a lot of companies were started in the last few years in an environment where revenue was not just 100% of your goal, it was like 200% of your goal, right? And the idea of thinking about when and if your company was going to be profitable was pretty stupid to focus on as a founder, because the venture capitalists weren't thinking about that, and you needed to get your next round done. So that's changed dramatically, just like Brian was talking a little earlier about the trend back to cooking at home. That's another back to basics thing, and you see that this back to basics thing all over the place. So I think if your company is a startup and you have the best technology on the planet, but the first time you're going to be able to operate at scale is 5 years from now, and the first time you're going to generate an actual profit is something like Amazon, obviously a wildly successful company, but more than a decade before they showed a profit, right? And he did the right thing, but he had a way to survive. And that's the thing, you have to have a way to survive. So I think you're going to see a lot of partnerships between startups who a year ago would have been, oh my God, I'm never going to work with that giant company in my space. Guess what? They're going to be best friends next year. And I think you're going to see, I think Peter said it earlier, you're going to see venture firms and private equity firms that already have substantial dry powder making large investments with small companies, but they won't be making as many small investments with lots of other small companies that they would have funded last year. So that's going to have a dramatic implications for everybody. But if I could, go back to something Sharon said earlier too. I used to live in Hong Kong and in Jakarta, and this idea of food security is another back to basics thing. To look around, even in the United States, a very wealthy company with a fantastic logistics and distribution system. There's a guy down here in my neighborhood standing on the sidewalk every day asking people as they walk by if they need food for dinner and handing it out, packages of food for a family of 4. And this is a fairly wealthy area. People are taking it. So food security is a big deal. And I think what Sharon was getting at is that unless you have a way to solve an important problem like this, you should probably shift to trying to solve an important problem like this. Because the sources of water and food, Frederico's in Brazil, the sources of soybeans and core inputs are not in the same places as where Sharon is sitting in Southeast Asia, where you have the highest growth and demand for protein consumption. And how to solve that is a really big deal for the next 20 years, I think. It's on a par with climate change. And maybe solutions like Benjamina's, where you can generate production by starting in a very different way than birthing a pig or a cow in Argentina or Uruguay or Brazil, and then processing it and shipping it around the world. That's the way we do it today, but maybe that's not going to be the way. And so I don't want to be off on a tangent here, but I think that the markets are really thinking about much more basic things, cash flow, profits, yes, but also solving large-scale problems in the world from a practical perspective. And technology will be a key part of that. Frederico hit on a really key point that's been a theme of mine for many years, is that, crypto is not the show. Blockchain is probably the show. Blockchain and being able to do things like permanently secure information about where things come from. But that's a huge deal. So, I'm on a page where, yes, we are pivoting, and in our investment business, backing several small venture funds that focus on healthcare solutions. But behind that is really finding cheap ways to solve scale problems. And I think that's something everyone should apply themselves to right now.
And Paolo and Brian, I see both of you shaking your heads, and Paolo, you're chomping at the bit to hit the unmute button there. But Brian, I want to start with you. I mean, with all that being said, how is this process from an investment standpoint changed, right? How are companies maybe preparing themselves differently in these areas for investment, or how are us as investors looking at these companies differently?
Well, I think as folks have said, it's taking longer to raise money and there's pressure on valuations. So investors are taking more time and being more frugal. In the case of the portfolio companies that I work with, we're asking them, can you extend your runway? What are ways in which you can shift your business right now so you don't have to raise money in the next year or two? What is the fastest path to profitability? In the case of food and beverage companies, we're saying, which are your highest margin products? Can you just focus on those for the next 6 months? It's that sort of, what would have been considered very radical, a year ago. I think folks are considering things they didn't necessarily consider before. I love the point that was made about sort of, unusual bedfellows or new partnerships. I mean, there are so many food businesses, from groceries all the way down to mom and pop restaurants, that just didn't think delivery was important. Now, I don't think any of them would say that. And so they're thinking, geez, yeah, can I sell on Postmates? Can I sell on DoorDash? And there's, so I think there will be all sorts of mergers because companies are in trouble. But I think it's a difficult time to raise. Investors are looking for great deals. But that said, it's not a good time to just stop asking for partnerships. One thing that we're hearing from CPG companies is they're not pursuing new accounts. They're not pursuing new grocery accounts, for instance. Because they just assume the grocery managers, the buying managers are too busy. But it's actually quite the opposite, which is really interesting. Everyone's looking for redundancy in their supply chain. People are very open to having new conversations. And again, in the alternative protein space, one of our investments is a company called Good Catch, which is plant-based tuna and other seafood. Their sales are surging like so many other grocery brands. But they're already in market. So if you do not yet have the deal with Walmart, if you do not yet have the deal with Tesco, it could be a little harder to get in the door, but you should definitely continue calling because people are looking for new options for their customers.
Yeah, it sounds like the time is now, right? If you've got something in this space, go, 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 go. Don't hold back. Paolo, are you seeing the same thing? I mean, your fund invests in a range of these areas. So would love to hear your thoughts on what's it like on the investment side and getting people prepared and ready.
Yeah, well, I second what Brian said as well, right? That what the market has put in front of us is that the number of deals we've been seeing, the number of startups we've been seeing has slowed down, right? This year in 2020. We are set up to analyze a large number of new investment opportunities. Last year, we analyzed roughly 10,000. So 10,000 is roughly 200 new startups per week. And so in the month of the pandemic, we have seen an average of maybe 80, 100 new startups per week, right? And that made me feel a little restless because I wanted to keep the pace that we had. My senior partner have a lot of experience, more than me on their side, and they told me, there is no need to get restless at all. It's actually important to recognize the signals of the market, and we'll be making less deals this year. It's okay. Most likely, they might turn out to be the best ones we have made, because as Brian said, the prices are actually, the valuation are down, right? And there is less startups, but they're likely to be stronger. And those that are have been basically washed away are those that maybe didn't have the fundamentals to survive and to continue. So less startup, but stronger. That's what we're seeing. We're also seeing longer times in terms of funding. We are also seeing just now the first startup that we will be funding without having met them in person, out of Zurich. Very strong founders out of ETH, which is a technical university in Zurich. Never met, and it's only been, everything has been through Zoom, like we're doing now. So, and then, the other thing I wanted to add is the fact that as a venture fund, we're actually in the raising our new fund as well. And we only started a couple of months ago. But what do? Do we give up? Do you give up because of the pandemic? And do you not even try and say, all right, we'll think about it in 2021? Not at all. You just, multiply your efforts and go at it even stronger, right? And I can see that even on a VC fundraising side towards the LP, it's not as easy as if you could meet in person, but things are still moving, and you still create relationships, right? So all in all, I believe that the pandemic has had and will have an effect on our industry, but there's no reason to be disheartened by that, right?
Mm-hmm. Yeah, and Sharon, I saw your reaction to some of that. I mean, are you seeing some of the same things? Like, how are you guys looking at this from the investment side? Making deals potentially not face to face, but also, how are you looking at deals differently as an investor in these areas that have seen, to Brian's point? I mean, we'll just say, from my standpoint, not his words, but 1,000x type growth in a matter of 2 months. I mean, what are you guys seeing differently?
I think, it's pretty much the same everywhere. Obviously, the deals that are coming in are much less than before. The invested amount probably has gone down about 30% comparing to the same quarter to last year. So while, this pandemic is happening and everybody's, with the stay-at-home order and things like that, but it's not stopping anyone from meeting up over Zoom and talking about things. Investments may not happen immediately, but the talks are ongoing. When time is right, I think most of the investors right now, they're sitting on some dry powder, and they are looking into, when is the right time, studying the market, the reaction of the market, and how these startups are pivoting or adjusting to the market before they put in their investments. So that's what's happening over here as well. Yeah.
Yeah, and Benjamina, I mean, you're sitting on the founder side of this. What is this?
Was trying to speak. I don't know. I've seen his hand go up, so I'm happy to answer. But maybe I don't know if Federico wants to go first.
Frederico, go ahead. If you had your hand up first, I'll call on you first. Thank you, Benjamina, for being a great student and calling that out. So go ahead.
Yeah, I'm a form of, I didn't say, but my background, I'm an engineer in business, and I have a PhD in knowledge management, and I have been an academic for quite some time too. So as a professor, at least I have to respect the same things that I teach, right? I just want to add or to reinforce that it's business as usual. A great project is a great project is a great project. It was a great project 2 years ago, and it will be a great project 2 years from now. From the entrepreneur perspective, when you have a good project, you will find funding. It doesn't matter what the situation is, structure or conjuncture. I don't know if that word exists in English. Yep. So 2 years ago, I was presenting in New York, and one thing, it was specifically to blockchains investments. And we had 2017, 5,000 ICOs. And I remember a project that called me to be an advisor. And he had a company that it never worked well for like 5 years. And he just said, okay, I want to be on blockchain and launch an ICO, and he did it. Actually, it raised $6 million. This is completely crazy. So in 2018, we had this project that was just ideas, and this is no difference than the dot-com bubble in early 2000 or 1997 for those that were part of that movement. And I see some gray hair in some of the presenters, so I'm sure I'm not the only one that were alive at that time. So it's not different from the dot-com hype. First, you have a lot of projects that just selling ideas, but at some point those ideas have to, you need to have traction, you need to have a fit on reality. As some people already said, to build partnerships, and especially when you're talking about global supply chain with large players like is the food industry, it obviously it's easier if you have good partners already to be successful. So what I want to emphasize is that despite the changes is, as I said, back to basics. You need to solve a problem. If it is a major problem, even better. And we have a lot of innovation. We have a lot of new technologies, not only blockchain, but AR, VR, artificial intelligence that come together to solve humankind problems. And food is a humankind problem. If you have a project, if you have traction, if you have value, if you are delivering value to the supply chain, to the customer, etc., you will find funding anywhere.
Yeah, no, it's a good point. And Benjamina, I want to come back to you as we're getting close to time. But again, you sit on the founder side of all this.
Yeah.
You just heard all these investors tell you how they're looking at things. But let's hear it from your side. I mean, as a founder, how are you looking at raising capital? What's been different in this process, seeing this massive growth and really the opening of an opportunity for you and your industry?
I mean, I think from an investment perspective, we haven't seen a huge amount of change. And again, I think that's probably because our specific, we are in R&D, so there's no sales change. Our labs have been closed, but again, it was for 2 months. So it's such a small thing that investors, didn't really react to that. So we haven't seen a huge amount in terms of the investors, but I think it's reinforced things that as a business you need to do. I mean, it's probably good for any startup to be frugal. So again, reinforcing that, looking at partnerships, this is probably things that we should be looking at anyways, and thinking about that more, thinking about, M&A, all of that are things that, maybe it's easy to put aside. And I think having a crisis helps you kind of put things back into perspective and thinking, actually, you constantly need to be looking at all these things. I think what we've seen as well is thinking about different ways of getting money. So there's the conventional investors, but there's been a lot of competitions that are still out there, and ways of getting, either grant money or simply different forms of money, which again is helpful. And I think a big change as well has been from a hiring perspective. So obviously people that are in the lab have to be there, but anyone else, again, thinking, do they have to be where we are, and all that remote working, thinking, from a biotech perspective, we always thought, well, we can't do that. But actually thinking more and more, some of the roles, we can make them global. And how do we monitor better, partnerships and things like that if we can't go and meet the people that we're partnering with in the same way as, investors look at investments, and how can they invest in someone that they won't, that they haven't met. We're thinking the same about investors, but also around partnerships.
Thaxter, I see you've unmuted yourself. Go ahead.
Yeah, I did. I've been very lucky in my career, which is, for better or worse, extended into several decades now. And I think one of the most important things I learned before I ever tried to start a business, I've been a co-founder twice, was from a guy I met many years ago who said, look, it's like your mom said, eat when served. And as an entrepreneur, as a founder right now, you shouldn't worry about the investor seeking a great deal. You should worry about you getting a deal. And because if you don't have any backing, and if you don't manage to get yourself on panels like this and gain some visibility for yourself, you're dead meat. Pardon the expression, I guess. Maybe all the meat is dead meat right now because Benjamina is going to build new meat. But I think that one of the back to basics themes is get yourself backed. And if that's through a partnership with someone you would never have considered, or the rich guy down the street who's trying to screw you and get himself a great deal, if that's a way that you can get through this moment, and if your product succeeds, you're going to make all the money you ever imagined, and you're going to be much happier with the product that's succeeding 2 years from now than you will, still sitting there working on your idea and no one's heard of you. It's just the way it is in times like this. Get going and get something done.
Yeah, I mean, I think Peter mentioned it as well, as great companies are made during these times, and it's not the time to sit by the on the sideline and just kind of hang out and wait. It's the time to get out there and just build and go as much as you possibly can, right? These are the times to do it in, because hopefully times like this will showcase what's the future in the next 10 years and ahead are going to look like, and redefine where we go. And with that being said, Peter, I want to start with you. I mean, kind of your closing thoughts. Where are we going with all of this, right? Marketplaces, with food, with transportation. How have things changed, and where do you see the next 3 to 5 years kind of shifting out in these areas as well?
Yeah. So I see that both sides, founders and investors, so see the picture. I'm also from Russia. From one crisis to another, we have a back to basics situation there every 4 to 5 years. So I think we're quite skilled at survival in tough times. So at all times, and even especially during those times, for investable companies, there is one thing that matters most: how quick a company can test new hypotheses and implement successful ones, right? And a company must be ready to do a pivot, even significant, to keep the company alive and investable. And there's a lot of new opportunities and doors opened, along with major risks and threats arising. And the fastest will survive and will be successful. That is a universal rule, and it will be especially applicable in the next 2 to 3 years. So there are some recent pivot success cases. I can describe one such successful pivot case in marketplaces. Not sure about FoodTech. I'm pretty sure there are many more. So in marketplace, because of changed investor preferences towards more anti-COVID businesses, some startups are now struggling to raise VC money for marketplace growth. And in fact, how to raise money for your marketplace also depends on how do you solve the classic marketplace chicken and egg problem. Which part of your marketplace, suppliers or buyers, to develop first. And VC funding may possibly be the only option if you scale both sides of the platform at the same time. But there are other ways, such as setting out to dominate a niche first and expand from there. And one company under my supervision recently decided to change the growth strategy and pivoted towards explosive growth of demand by participating in joint venture with its anchor client, aiming to go global in the short term, and aiming to build from there the supply side, also globally, to cover the demand, switching over time the supply from external providers to supply available at home marketplace. Mm-hmm. So yeah. There's another recent investment case of shifting to online businesses. So in marketplace niche, VC largest funds are now making big bets on vertical industry-specific B2B marketplaces. So the first wave was kind of 20 years ago during dot-com bubble. And early players were consolidated by Alibaba, eBay Business, and similar players. You all know these names. And now it's the second reincarnation of that wave. And it's obvious why. Because many supply chains will be disrupted by supply-side bankruptcies and topped with transportation crisis created by the same reasons. Many buyers and sellers will prefer to be more flexible in finding a counterparty for transaction. And also the new criteria for B2B procurement in post-COVID will be not good value for money as it used to be, but rather price for functionality, because the profit margins will be squeezed all along the supply chain, and buyers will be looking for a lower price for same functionality. And there is no more room for the luxury of premium pricing. It's basically not affordable no longer. So as a recent case of investment in this sector, a month ago, Bain Capital disclosed a deal with Material Bank, which raised $28 million in round B. I'm pretty sure we'll soon see new examples in B2B marketplace deals.
Yeah, absolutely. And where can everyone find you, by the way? We're signing off here. So where can everyone find you website-wise?
Where?
Yeah, what's your website that everyone can go to find you and the fund?
The Bain Capital Ventures?
No, your fund. The company you represent. Where can everyone find you online?
Yeah, it's a small fund. It's rather an advisor firm. afcapital.ru or afcap.ru.
Perfect. Thank you. And Sharon, any closing thoughts, and then where can everyone find you?
Yeah, so I think, the things that we have seen pivoted quite a bit is in the marketplace as well. We have seen things like shifting from B2B marketplace to even B2C. That's what's happening here, because they need to reach out to the consumers directly. I think, what we are seeing here, that despite the pandemic going on globally, digitization or the adoption of technology in whether they're big corporates or the startups themselves, startups can help these big corporates merge and get into digitizations. These are the direction that needs to be happening. And it has to happen probably previously, before the pandemic, you have a 3 to 5 years runway. But now you have to shorten that runway. Do it in 3 to 6 months, maybe, right? So yeah, so I think, the acceleration in digitization is something that all of us have to look at, and how to be, come out of this pandemic and to survive in the new norm, per se. Okay, I think I'll just keep it rather short in that sense. You can look for me on LinkedIn, or you can check out my company website. It's vote18.ventures. You can, drop me an email, Sharon at vote18.ventures. Yeah, thank you so much.
Perfect. Thank you as well.
Yeah.
Frederico, quick closing thoughts, and where can everyone find you? We're a little over on time here, so where can everyone find you in your quick thoughts?
I can be found on lisglobal.net, lisglobal.net. And I think that, as I said, when you have a crisis, it's always an opportunity. So it's an opportunity for entrepreneurs, for startups, and that's what you're going to see. We're going to see a lot of successful entrepreneurs during these times that are not easy for anyone, but it happens from time to time. It's nothing new. History, it does not repeat, but it reams itself. So that's what we have to keep in mind all the time. And thank you very much.
Thank you. And Brian, same to you. Closing thoughts, and where can everyone find you?
I'll post my LinkedIn in the chat, and folks can feel free to reach out to me. I think there's been a lot of agreement here, and it's just really that sort of time to reduce your business down to its most essential elements, for better or for worse. I wish we had more time to talk about hospitality solutions. That's something we invest heavily in, but we're really wondering what that looks like over the next few months, especially for businesses in big cities like New York and London and San Francisco and elsewhere. We're already seeing a lot more smart vending machines and automation, so I think that's going to be part of the solution. But excited to be in touch with you all and stay connected.
What's your quick thoughts on hospitality? We didn't get a chance to get to it, but what's your quick thoughts? Where do you think this is all going to go, making a ton of investments in this?
Yeah, I think it's going to move outside, and there's going to be a lot more automated self-serve.
Done. We're coming back to that in another episode. I'm going to host you again. I want to dive into that. So Apologies, we didn't get to it today, but we'll come back. Benjamina, closing thoughts, and where can everyone find you?
Yeah, so I put my contact details on the chat. I think everyone is doing so at the moment. Closing thoughts. I mean, I think it's a very difficult time, and it brings, a lot of changes. But I think it's really taking that and making the best out of it, and seeing for businesses, how can we improve, and how can we make changes that actually will make us more resilient and better in the future. And that's what we've been doing, and that's why I recommend.
Awesome. Thaxter, closing thoughts, and where can everyone find you? Oh wait, Benjamina, where can everyone find you? What's your website?
Oh, put it in the chat. I'm sorry, it's HigherSteaks.com and Benjamina at HigherSteaks.com for my email.
Perfect.
But yeah, put it on the chat for.
Awesome. Thaxter, closing thoughts, and where can everyone find you?
Our office is in Burlingame, California. I'm calling in from Sausalito, California, home of the Marin Rowing Association team that my son would have rowed on this spring if we hadn't canceled the season. But look, our website at Mondiale Advisory will go live next month, but you can easily find me on LinkedIn. There aren't too many Thaxter Sharps. I think there's one on the planet so far on LinkedIn anyway. But closing thoughts. I think it's been a difficult 3 or 4 months, but it's going to be a very exciting time to be in the business of starting new companies, and especially applying a lot of technologies. Some of you guys are exploiting them, that really looking forward to seeing them gain traction, because the idea of local and people on authenticity, which Frederico touched on, I sent a quick note to Kyle earlier as a side. Every bike shop in the Bay Area, I was up in Tahoe last weekend, every bike shop in the Tahoe area has like one bicycle left. So one of the things that's clearly happened is people are spending a lot more time going around in their neighborhoods, or at least in places they can access by bicycle, doing a lot more of their daily activities. Well, maybe this going local trend is a really big deal all over the world. I'd be curious to hear if that's the same thing people are seeing in other parts of the world. I think it's fascinating.
I agree. And I think all of us would agree we're probably seeing the same thing right now. And the bigger question, which we're going to follow up, Lena and I are chatting about putting this episode together, is how long does that last, right? Just kind of like we talked about with